If you find yourself at your desk thinking, there is so much to do in my business and I don't know where to start, this message might be for you. If you're wondering, should you be working on your finances? Should you be working on generating leads for your pipeline? Should you be documenting your system so it's all not living in your head? Or should you be doing something else altogether different? Understand something. We're not lazy, but sometimes everything feels important and we end up doing nothing because we can't decide. And that is exactly why I am hosting a live Zoom session on February 17th at 1 p.m. Eastern called Lou University Prereqs for Success. In this hour together, I'm going to walk you through the core areas of a well-run creative business. Okay, we're going to go through operations, finance, marketing, sales, and leadership. And as we walk through these different areas, you're going to say, oh, am I up to snuff here or do I have gaps? You're going to say, I feel pretty good here, or no, that's really a spot that I need to work on. And hopefully when you leave this Zoom, you'll have some idea of what your next smartest move should be. Likely, it might be that there's a Luann University course to help you take that next step, okay? If there is, great. If there isn't, yay you got some clarity, you're on with your day. So I would love to invite you to come to this Zoom. You go to luannigara.com/prereqs, PREREQS. The link will be in the show notes. And 2 attendees are going to win a free 5-week Lou University course, and every attendee that is there will get a special offer available only to you because you were there with me for this time. So if you're tired of spinning, overthinking, and wondering if you're working on the right thing, I'm hoping that this time together will give you the ideas of where you need to put your time and attention. So go to luannigara.com/prereqs, and I will see you on February 17th, 2026. Welcome to A Well-Designed Business. My name is Luann Nigara, and I'm so glad you found this podcast. Together with my husband Vince and our partner Bill, we have grown our company WindowWorks from the ground up. So I know and I understand the challenges you face in running your interior design business. I also know that your talent alone isn't enough to ensure your success. So on this podcast, we talk about strategies and practical steps to help you grow your business. But make no mistake about it, we have our share of fun here too, mixed in with those aha moments that I love so much. This isn't fluff. Nobody has time for that. Whether you are a new interior designer or a seasoned designer, I am here to help you create and to manage the kind of interior design firm that you dream of. It's straight talk and it's action. Are you ready? Let's get started. Hi, welcome to A Well-Designed Business. We're going to start with a question today. Have you ever looked at your financial reports and thought, all right, what does this actually mean, right? Not just what happened last month, but what it means for your decisions, your energy, your stress level, and whether or not are you actually building the business you think you are? Because here's the thing. Most creative business owners, you're not bad with money. You might be overwhelmed by the finances, and more often than not, you're not looking at information that tells you where you've been and doesn't help you decide what comes next. Well, my guest today, Megan Dahle, lives exactly at that intersection. Megan has a master's degree in accounting and over 2 decades of experience in working inside hundreds of small businesses. But what makes her really different is this. She doesn't just understand numbers, she sees them, literally. Like from a young age, Megan has seen numbers as shapes and colors. And today, she uses that ability to translate spreadsheets and balance sheets and financial statements into something that most of us creatives have never experienced before, which is clarity, without judgment, without rules, without someone telling you you should think something, know something, or do something, but with a way to understand what your resources are actually buying you, where growth is possible, and why your business might feel heavier than it needs to be. In this conversation, Megan walks us through a simple framework for thinking about the financial aspect of your business. While it's grounded in accounting, this is not an accounting lesson. It's a way to see your business more honestly so you can lead it more intentionally. And as you listen, I want you to notice something. This episode is not about becoming a numbers person. It's about becoming a decision maker, which brings me to this. If you have been feeling unsure about what your next step in business is, not emotionally unsure, strategically unsure, that is exactly why we have created the Prereqs for Success for Lou University. Lou University Prereqs for Success is a live session guided by me, designed to help you understand the stage of business that you are in now, not the one you hope to be in, right? We want you to help you see how sales, marketing, finance, operation, and leadership, how you can map the challenges you're facing right now so that you can see if a Lou University course is part of the roadmap to getting from where you are now to where you do want to be. So this isn't teaching. We're not teaching you finance or marketing or operations or leadership in this session. And it's not a preview of the classes either. It is a session to help you uncover where the gaps are so that maybe when you look at the roster of Lou U classes, you go, oh, that one could help me here. All right. So join us live on February 17th, 2026. And here's the thing, bonuses are available only for live attendees. Mega bonuses, big time bonuses, bonuses that we've never given away before. All right. And, not for nothing, but you'll walk away and possibly walk away with having been able to make a confident decision about where your next step should be. All right. So the link to get into that Zoom is on the show notes. It's probably also in my Instagram. And if God forbid you can't find it any of those places, you can go to luannigara.com/events and it will be there as well. All right, let's get into my conversation with Megan Dahle. Hey, Megan, thanks so much for joining me on A Well-Designed Business today.
Oh, my pleasure. It's so great to be here, Luann.
So, Megan, you're going to talk to us about money. We like people who talk to us about money. People. Yes, we do. Here's what we do. We like kind humans that talk to us right brain individuals nicely about money. That's why we like it. Okay.
Awesome.
And I saw that you were a speaker at IDS, so you automatically have to be a kind human. Plus, I met you at IDS in Chicago X amount of years ago. So you're in the kind human money talking space as far as I'm concerned.
Aw, thanks.
Okay. Today, you have a 4-part framework that you want to walk us through that what helps us understand the parts of our business, about the money, how it hits our business. Yeah. Talk to me about it.
All of that. So usually when clients come to me, they almost have their tail between their legs and they're like, I can't believe I got this far without knowing my numbers. I feel so embarrassed for asking about this. I'd say 95% of my clients are embarrassed about asking these questions because they are doing so well and have gotten this far and they feel so guilty about not knowing their numbers or embarrassed or whatever emotion you want to.
I know. I get it.
Put onto that.
I hear you.
Yeah. So I have a visual brain. I've always had a visual brain when it came to numbers. And I want to help people with the visual brain walk through what the numbers actually mean. Because if you think about like your balance sheet and income statement, they're historical. Great. That's helpful, but it's missing like at least 50% of the picture.
Okay.
Of what actually needs to happen inside a business. So we're going to talk about 2 directions. First of all, historical versus future.
Okay.
And then we're going to talk about the 4 functions inside your business that actually take place in every business. There's these four elements take place. So if we can have a visual cue instead of a spreadsheet cue to understand those parts, I guarantee you probably already understand or have a good sense for what's going on in your business in these 4 areas without needing to be told by your financial statements.
Oh, well, I love that.
Yeah.
I love the idea of, I'm very curious to understand what these visuals are. And because I'm a good test pilot for this,
Okay.
because I know enough to be dangerous. Okay. But as much as I know, and standing side by side with the Vin Man for 1,000 years, and even having worked with Michelle Williams, there's still this, and my mom is my bookkeeper, who has been a bookkeeper for businesses for decades. There's still this where I'm like Vinny will look at me. I will randomly ask him a question, and he'll be like, "You know the answer to that, Lou." And I'll be like, "Buddy, how about you just answer it for me? How about that? How about you just answer it?" Why do I have to sit here and bend my brain on it? He's like, "Okay, let me walk you through it again." I'm like, "You poor baby, walk me through it again."
And frankly, that's not like where your energy is probably best spent
I'm like,
anyway.
right. Do I need to hold this, or can't I just ask you every 6 months how to get to that number again? How about that?
Yeah, absolutely. Absolutely. So let's start there. Like, you have a bookkeeper. That's awesome. Most of my clients have bookkeepers, and that's
Yeah.
great because they're bringing clean information to me.
You're
I'm
right.
like, but they're like, I still can't, I can't see. Well, that's the
Yeah.
future. That's the future talking there,
Bookkeeping
because
equals future. Okay.
no, bookkeeping equals history.
Oh, okay. I thought it was funny because I was
Yes.
like, "That's funny, but all right, I'm on board. What do you want me to?" Okay, so bookkeeping is history, right?
Yes. And so I come from an accounting background. I've got my master's I've been doing accounting for 20 some odd years. And accountants and bookkeepers like to give you a right answer. They like to be correct. They like to be
Yes.
able
Oh my
to say,
God,
this is a fact.
You're so right. That is a personality trait of them.
Yeah. Yeah.
Yeah. Yeah.
And so when we go to them and say, hey, help me think about the future, they're like, this is probably what's going to happen, but don't hold me to that, because there's a lot of different things that could happen.
So true.
Yeah.
Okay.
And so if we can get to the present moment with clean books, that's a great start. Great.
Okay.
Check mark.
Right.
You have somebody doing your books. They're giving you like, here's what's in receivables. Here's what's your income statement and balance sheet. Great.
Mm-hmm. But I also find, and I'm sure you do too, just to not go past that, is particularly like the interior design business. If you don't use a bookkeeper who is versed in interior design, you can get a lot of horse crap happening in your books, right? Like, I mean, even my business is not interior design and not nearly as complex as a designer's business, but it's not a normal business model. My mom has run bookkeeping for multiple business models, but it's like, is that a speaker expense? Is that an advertiser? Is that a this? Is that a that? Is it a bah? It's like, what is that? What is a chairman of the board? She's like, what is a chairman of the board? You know what I'm saying? So I find that if we're not constantly saying not that column, not that column, until a bookkeeper gets a good handle, it's also just garbage in, garbage out, right, Megan?
Absolutely. And then you add the extra layer on that of how much cash of your clients that you're holding that's not yours.
Yes.
Get commingled. It's complex.
Yeah.
Interior
for
design
designers
businesses
is crazy.
It is crazy.
Yeah.
It is crazy. So get yourself a good bookkeeper that knows the industry for sure.
Mm-hmm.
So secondly, we want to like look in the future. We want to know what's coming down the road, what we have already in the pipeline, what's already been signed on the dotted line. When is that cash coming in? How much of it is ours? And so just a basic cash forecast is also super important.
Okay.
But all of this is going to have the same 4 elements. So we're going to zoom out a little bit and we're going to take a look at your business model. Because whenever we're talking about numbers are a description. They're adjectives. They're describing something. And in this case, they're describing your business model. Okay. So we're going to go to the first part of any business model. You need to find people to raise their hands and lean in. Right? That's the outcome that we are measuring when we are doing outreach. Call it marketing, call it outreach, call it networking. The outcome is that somebody is interested.
Right.
Yes. So that first element, if you think to, Your current book of clients, where are they coming from? Are they coming from my, the women that I volunteer with at my kids' school? Are they coming from my BNI group? Are they coming from contractors? Are they coming from Instagram? Like, there are different places that they're coming from.
Okay.
So if we can measure our efforts in those particular areas, like what is it that we are doing? So for example, if you have been doing an interior design for 20 years and all of your clients have been coming from contacts that you have with your kids at school, and your kids are graduating and going off to college,
Yeah, your
right?
pipeline's about to dry
Your
up.
pipeline is about to dry up, but we know that now and we can see that coming. And that's where, like, oh, okay, we want to go find something that's more like referral based. If we can start getting the referrals from those clients, or if I can join a tennis club, something that is going to take time to build up, but it's in replacement of something else. So the first number I always look at, which is the hardest one to quantify because it is the little squiggly, is, do I have an inflow of people who know what I do and are interested?
Okay.
Right? And this is also the part where I strongly encourage my clients, if we're going to go select something different, something new, I want you to enjoy it. If it is like pulling teeth for you to sit in your local Rotary Club and schmooze and rub elbows, and that's painful for you, that's not sustainable. So we want to find
then please
something.
don't do it. Right.
Yeah. So we want eyes on, we can have eyes on the future by having eyes on, where are my people coming from?
Okay.
And how are my efforts? So if we can quarterly, twice a year, know that number, dive into the list of clients that you have and the people that you've talked over the year and where they came from, that's actually a really great exercise.
Yeah.
You don't have to do it every month. It's not on your income statement.
Right.
But you're going to learn something from it.
Yeah. I actually have, that's one of the first things I have all my chairman of the boards do the first month. Get me the data history of all your clients. And if you have a billion clients, get me the last 3 years, exactly how they found you. Like, don't just say referral from Sally at the PTA's mother, or referral from Joe the builder. Like, because there's a lot of information in that. And sometimes it just surprises us because we forgot that connection led to that connection led to that connection. And we just think of the first one and we forget that the source was originally 2 before that. And the other thing I find that sometimes we learn is we're like, whoa, I'm walking around going, Instagram doesn't work for me, but wow, 4 out of 7 came from Instagram. That's typically not what we learn. We learn something different, actually. Yeah. What we usually learn is, geez, none of them are coming from Instagram, and I'm torturing myself here. Why does it not work for me the way it works for Julia from Chris Loves Julia? Why is it different for her, right? So, but I love that exercise because it really is very telling, right, Megan? It really is interesting data that informs what we do and how we go after and keep that pipeline going.
Yeah, it is. It is. And especially when I have clients that are like, well, I've been going to all of these meetings for this networking group and it's not working. Like, how long have you been doing it? For years. How many clients have you gotten? None.
Yeah.
And now all of a sudden we're reliant on it. Like, it has to work because something else dried up that we didn't notice. So think of that as like your headwaters. That's your headwaters. Okay. All right. We want to be in the places where we can express what we do to people who would want our services. Right. And they can hear us. Those are the elements. So if we're like, nobody wants what we have, we know what to fix. We need to go find headwaters.
Sounds good.
So now they're raising their hand, and this one is found on the income statement. It's sales.
Okay.
Once they raise their hand, how we communicate with them, how we invite them in, consistently. Mm-hmm. Not thinking that, oh, they didn't open that email because now they don't want me. That means they don't want me because they didn't open that email. How are we consistently communicating and inviting people into our world and inviting them to sign on that dotted line? Okay. If we have a bunch of inquiries and we don't have any sales, we need to fix our sales function.
Right. Something's wrong. Something's wrong.
Right. So if we're looking at that forward forecast, or if we're looking historically on your income statement and sales month over month over month over month, because it is a long sales cycle, this is declining, or it's going up and up and up and up. We know we're either getting better, we can, well, we put in this new sales process a couple
Right.
months ago and we're seeing the results of it. So
Right.
efforts, we want to be able to measure our efforts, and we want to be able to point to, like, oh, it's working, or ooh,
That's right.
that's not working.
Yeah.
Okay, so
Yeah.
sales.
Because there's a problem there. If you're generating leads, but you're not closing, you know, whatever percentage is historically good for you, I would say probably 60% is good for any business, a closing ratio, right? And maybe you go to 70 or 75 if you're a longer bit, more seasoned business with more referrals. But either you're not communicating your services properly so it can be understood, because a confused mind can't buy. That's like a
Mm,
number one sales thing. If I don't understand what the heck you're saying, I can't buy it. I can love you, I can love your portfolio, I can think you're sweet, I want to be your friend, but if I can't understand the path to how you charge me, how I give you money, how much the money, all this is going to be, and how you're going to deliver it, I'm just going to walk away, right?
yeah.
Or maybe you've got all that communicated really well, but the price point on it isn't right. It's out of whack. It's either, and what's funny is a lot of people think a big mistake is if it's too high, and really a big mistake is if it's too low, right?
Yeah.
Because that really is like, that's scary. It's like, wait, all that for only that? That's not a good thing to your educated consumer. Everybody wants a deal, everybody wants value, but they don't want to be like, let me take my 200K and gamble on somebody that their price is so low I don't trust it, right?
Yes. Yes. Your price is a communication of your value, and if it's way
Yeah.
under what they expected, ooh, it's not a
Yeah.
lot of experience there. I don't know if I'm in good hands.
Right, right. And all of that is a made up assumption based on a low price. It doesn't mean there is
Hmm.
an experience there, right?
Right.
It's a made up assumption. So, okay. So then
Okay.
we're in our sale. So in our books, we're seeing our sales, we're seeing our gross sales.
Yes. And on your
Mhm.
future forecast, your future cash forecast, you can see other sales that are coming in. Usually in interior design, about 6 months out is about as far as you can get before it starts dwindling off. And that's about right, because that's about the sales cycle there. Within
Right,
about,
right. You're
yeah.
seeing like you're getting the design fees at phase one, and you're getting
Hmm.
a procurement money at phase two. You're getting project management fees at phase two, or whatever it is. So you've got the, almost like in a traditional business, the deposit and balance due cycle. It's just different
Right.
things and called different things and happens at different stages in a design firm. But X client that signs on January 1st is going to be paying you sometimes for 6, 8 months, a year, or two or three, right? And that's what you're talking about.
Exactly.
Okay.
Exactly. Yep. And that's actually a really good way to start, like, immediately see if there is an issue coming up in your outreach or in your sales, is that we look at that future forecast and go, whoa, 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 in 2 months, 2 months from now. So,
Yeah, we're
we
getting
need
to the
this
last
work.
payments of all three clients at the same time.
Yeah.
Well, mom's got to make some bank. What are we doing here?
Yeah, 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 yeah. Now let's put our attention where it actually needs to go, shall we?
Yeah, yeah.
And then we come around to, like, they've signed on the dotted line, capacity. So we have these
Okay.
headwaters. This river comes down. It's either diverted into sales, or it's, keeps to go on down. They're going to be on our mailing list for what. That's fine. But how much are we capturing?
Right,
Now we have our capacity. How many glasses of water can we fill with what's coming through those sales?
right.
And if so, let's say we have four empty glasses. That's we have room to take on these four projects. And so if we're filling them up with these sales and we still have two empty glasses,
Right.
like, we have the sales, but I also have, like, this assistant designer. I don't have the hours to fill. Once we start putting those sales on our future forecast and we're looking around at, okay, we have the sales coming in, we don't necessarily have the hours. Once your capacity in your sales, if you were to measure, I can take care of $100,000 in revenue every month.
Hmm.
I have $75,000 of revenue a month, and that might still be profitable for you. That's great. That's fantastic.
Hmm.
But the difference between what your business is able to handle in the capacity and
Hmm.
what it's actually bringing in on a consistent basis in the sales, the difference between those two is going to show you your efficiency.
Okay.
So it's the relationship between your sales and capacity that really matters, and it's often overlooked by designers because they don't. It's more difficult to understand. Like, my designers are about 70% billable, that other 30% of the time. Da, 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 da. But if you're looking at the culture of your business through the eyes of your capacity, I can do 100, we do about 75. And if it's about that 75 and it dwindles, or if that 75 is going to grow up to 100, great. But if it's
Mhm.
there's consistent mismatch between your capacity and your sales, what happens is that your staff gets in the habit of that 75 being their new cap.
Yeah, they feel like they're busy at 75. And you're like, sweetie, you're optimized for 100. Get it rolling when I bring 100
Yeah.
in. But then it's like a mutiny, right? Like, I'm working so hard.
Yeah. Yeah. Right. Like all of a sudden it shifts. Like you could have been doing, last year we did 100,000. We did between 100 and 150 consistently all the time. And sure, there
Yeah.
are ups and downs when things do certainly feel busier than they are. It's just the
Yeah.
phases of projects hitting at the same time. It happens, totally
Right.
happens. But if that consistently happens time after time after time, we need to find something that's productive for your staff to do so that, yeah, they feel busy because they are busy.
Yeah, yeah, yeah.
Yeah.
Now, take a step back for the designer listening that is trying to understand. Is there a way to explain it fairly straightforward, Megan, how I know the dollar value of my capacity, right? Like I've got
Yes.
like, so there's a formula for this is how many people on my team. It's me and one person. It's
Mm-hmm.
just me. It's me and 15 people. What's that formula? How do they get to that?
So how I do this with my clients is that we line up each person that is billable in the firm.
Mm-hmm.
And we look historically at about what is their billable time. Is it
Mm-hmm.
70%? Is it 80%? Some people are at 15% because they're just dabbling, in some of the more technical things. What's their billable rate? And even if you do flat rate, even if you're doing
Right.
flat rate, there is an internal hourly rate that you are charging for your employees. We can find that historically. It's findable. So billable
Well,
rate.
and I'm like, I mean, I gotta believe we agree on this. I don't care if you bill a flat rate. It has to be calculated from your billable rate, right? Like
Yes.
I just had this in Las Vegas market a week or so ago. And somebody was like, I don't, are you in favor of billable by the hour or flat fee? And I'm like, I don't care. I said, because if your flat fee isn't based on your billable hours, you are leaving money on the table. I said, so I don't care how you say it to the client, but I do care that you calculate it by the hour every time. Right?
Yes. Yes.
Yeah.
Whether it's post-mortem or whatever it is, you need to
Yes.
know that these flat rates, like you're not leaking money out of the floor.
Because so many people do it based on gut. Yeah, this should be about $10,000, and it's like, well, I probably won't take that many hours to do it. And then, the tough part is you come up with the 10,000. By the time you put it in the proposal and email it away, you've whittled it down to 6,500 because you're afraid to send it at 10, right?
Right.
So,
Mm-hmm.
yeah, I mean, the flat rate has to come from something. It can't just come
Yes.
from a gut feeling, right?
Preach. Preach.
And I like that you mentioned the very practical from the data, right? It's like if you've done 5 kitchens and the same square footage and they all take you, I'll pick random hours because I have no idea, 30 to 35 hours. Well, then, yeah, you can go to your data, your spreadsheet that says one kitchen, X amount of square feet is going to be X amount of dollars because that's based on my 35 times my hourly, right? We're not like calculating it every blasted time, but we're calculating it often enough to get good data to give us the
Yes.
good number, right, Megan?
Oh my gosh, Luann, one of the most effective exercises I do for my clients that every time they're like, oh my gosh, that explains everything. Whether they're hourly or flat rate, because you
Right.
discount your hours and you're like, oh, that's too many. I can't bill them that much.
Exactly. Exactly.
That was my fault. That took long. Inevitably, is we do this. It's super painful and it takes 2 hours, but it's like eye opening. We go through what it takes to get a project completed.
Oh my
who's doing
God.
the work, how many
Yep.
visits does it take, what's the difference between a client that takes 8 hours and what's the on this one tiny task. We go task by task by
Thank you.
task, like down to 15 minutes in every time.
They're
Time.
shocked. They're shocked that it takes
Shocked.
that long.
It
Yeah.
takes at least 2.5 times longer than they thought.
Always.
Usually at least 3.
Always, always,
Always.
always, always. I have found this in my one-on-one coaching. It's like if it's somebody is like, oh, they just want me to pick wallpaper. It's 3 hours. I'm like, it's not 3 hours to pick wallpaper. It's not. Oh, well, and I'm like, okay, standing in the wallpaper showroom, maybe it takes 3 hours, but not the whole deliverable of you presenting the wallpaper, going to the showroom, finding it, going to their house, figuring out what you want, being about. And then what happens is somebody will be like, but I can't bill somebody 10 hours to pick wallpaper. They won't think it's worth it. Right. That person, if all they want is wallpaper picked and they don't want it professionally picked based on your experience, your expertise, and your resources, they can go on the internet and shop for wallpaper. That is not a luxury consumer. That is somebody who wants a personal shopper, right?
Amen.
But we can't debate that when you do it with your professional expertise, there's nothing 3 hours about it.
No.
No.
And frankly,
Not if it's a one-off item. Let's not. Like, by the time you go to the house, you take your pictures, you have a conversation about what kind of paper it should be, what is the floor like, blah, blah, blah. Go to the wallpaper showroom, spend an hour there, flipping through things, ordering samples, bringing the samples back to the house, now getting the wallpaper guy to give you an estimate, now creating a proposal based on the episode, now getting the money, now placing the order back at the showroom, now receiving the order, now calling the wallpaper guy to get it hung, now stand there looking at her going, voila, it's done. Yeah, 3 hours, my butt.
Right. And there's so many little elements in there that are forgotten. Like
right.
You have to email the installer. You have to talk to the installer.
Yep.
And the context switching between each of those tasks and doing the others, it's far beyond. It's far beyond.
Yeah.
So when it comes to capacity, knowing what you're capable of doing is the hourly rate times the percentage that were actually billable, and add that up for each person. And that's how much you're able to make per month. And I know procurement, when it comes to we figure that out too. So if we look at your income statement and you're consistently like 30% of your gross profit is coming from procurement and the other 70% is your profit, we're going to put a 30% bump on what that profitability gross revenue is for your capacity.
Okay.
Mm-hmm.
Okay, so that is actually very clear, right? It's simple math. I have 5 people working for me. They are all billable 80% of their hours, times X amount of hours, times our hourly rate. That's how much we can design in a month. That's it. That's where we're at, right?
Amen. Good. Amen.
Okay, love it.
Okay, now we have this fourth element I call stewardship. And this is the care that you take of your resources. And granted, I'm the money person, so it means the cash most of the time. But a side product of this is also your energy and your time. The whole purpose of this is to make sure that your attention is focused in the part of your business where the attention is needed the most. You are in a relationship with your business. And if your business is begging you for some outreach care and you're like, oh, I just need to fix this capacity process real quick and then I'll get over there. Like, could you imagine your kid saying, Mom, I'm hungry. Mom, I'm hungry. And you're like, oh man, you should take a nap. You just seem so tired.
Or I'm busy feeding your brother over here. You're starved. Go starve.
Right. So by the time we get to stewardship, we want to make sure that we are caring for our resources, starting with cash. We want to give our cash a job. We know what it's going to do before it hits the bank account. We know if it's going to take care of our outreach, if it's taking care of our sales, if it's taking care of our capacity. We know that if it's taking care of us, we know that if it's saving for the future, we know if it's going to go be paid for taxes. We want to know so that it's not this tempting, like, ooh, look at that bank. I have not seen my bank account that big in a long time. Oh, I've always wanted to redo my office. I'm just going to go redo it right now.
Oh, right. And I'm going to tell myself it's a legitimate expense too, because if I deserve
Yeah.
it.
I have nothing against, I've had many clients redo their
100%.
offices.
Yes, 100%. But we got to
That's
know it with, you have the money to do it, not just any money to do it.
Yeah. And so we get to the stewardship and they're like, I really want to redo my office. And I'm like, let's take a look at this cash flow. Look at this. You have money to redo your office.
Yeah.
Let's name it now.
My Doma Studio is your complete designer toolkit. You know this, right? My Doma makes it easy to streamline your processes, track your projects, communicate with clients, and just get organized. It is created by designers for designers, specifically to address what you need as a design business owner. My Doma is now together with Studio Designer, and they are the industry-leading solution. With 20,000 plus users, more designers choose their platform than any other. Are you ready to reach the next level of profitability and efficiency? Book a demo with My Doma Studio today by going to mydomastudio.com/Luann. That's mydomastudio.com/Luann.
Give it a job.
So do you ascribe to a version of like profit first, Megan, where we get a big check in and X, 7% or whatever gets pulled out for taxes and X percent gets pulled out for operations, X percent gets, obviously all cost of goods gets pulled out. But if it's a design fee, there's no cost of goods, right?
Yes. So I'm a huge advocate of profit first for a lot of people. It doesn't work for everybody. I used to be a profit first professional.
Oh, were you?
Yep. It doesn't fix everything, right? It doesn't point to like the how to fix, but it certainly, especially when you have a lot of other people's money, move that aside. Tax money, move that aside.
Yep.
Yes.
Cost of goods and taxes feels like, and what I've learned with all the people I've spoken to, Megan, is if your brain clicks in finances, you're like, why do you need profit first? Like Vinny was like, this is silly. And I'm like, well, that's because you can mentally separate it in your head. When you're looking at $500,000 in the business checking account, you automatically chink, 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 cost of goods, boom, taxes, boom. The rest of us, we kind of need it in our face. We kind of need to be like, okay, that's for that. You know what I mean? Like my mom's always like, I'm like, pull the taxes out. I don't want to think about it. Just pull them out.
Luann, I do profit first with my money. I'm pretty dang good with the numbers, if I say so myself. I do profit first because I want to see that tax money over there and safe. I want to see my owner pay. Like, oh, good, I can pay. If nothing else happens, I can pay myself for 6 months. It's a sense of
that's
calm.
mine is the profit account, which is not according to profit first, the 1%. That's the profit account to me is my security blanket account. That's my 3-6 months of runway. I've adapted the accounts to what my squirrel brain needs. Yeah. I need to know that I got 6 months of payroll for my people. I need to know the taxes are covered, and then after that, I can kind of move it around. I can figure it out in my head, operations money and blah, blah, blah. But those are the two that I don't want to wonder about. I want to open up the checkbook and I don't want to see them in my main account. They're not even there. I got to click to a different account to see them.
I actually burned myself on that. I did. And I was like, I'm so smart. I'm an accountant. I know what I'm doing. I got burned so bad on taxes one year. I was like, okay, nope.
Yeah. I think the only reason I haven't gotten burned on taxes is because I can't even say it's because of Vin, right? Because you think it would be because of Vin because he's never been burned on taxes, been running businesses for 50 years. Yeah. But it's by the time I made LN Inc., its business off of WindowWorks, I had heard so many horror stories of not just regular humans, but finance people like yourself and Michelle Williams that are like, yep, that first year in business, didn't have the taxes. And I'm like, sweetie, that ain't going to happen to me. I am not doing that.
It's so good that you can learn from other people's mistakes. Yeah. Me, I prefer to make them big and on my own so they really drive home.
Yeah. No, it's funny because Kat Anderson, she teaches online bookkeeping 101 at Lou University, and she teaches our second phase construction class, documentation class, and she's a money brain. And she one time said to me, I don't get the whole profit first thing. So it's funny. I do know that there's, like you said, there's some people, it's not a cure-all, it's not the end-all be-all, but I feel like if especially you're feeling like, how you say most designers come to you like, oh my God, how did I get this far? And I still don't understand this. For me, you take $100,000 check for furniture and $50,000 of it is for furniture. That I don't want to look at that money. I'm like, just put that's not yours. Don't even have it in that account. So I'm a big fan of moving that taxes and that cost of goods monies away, especially if you're on that beginning journey of really understanding how to manage your money, right? Like that's an easy first step that you can take with little guidance, and it will serve you, in my opinion, right?
Absolutely. Absolutely. And it makes you feel smart.
Yeah.
Like competent.
Well, I like that too.
Like I got this.
Look what I did.
Look what
I did this. I click and move. It is true though. It does. It just makes you feel like in control, right?
Yes. And that's the thing. Like if you step back, sure, your income statement is going to show you your sales. It's going to show you most of your stewardship unless something's hanging out on the balance sheet. But really, stewardship is about naming the cash. So those two elements are found on your financial statements. The second one, you just got to go digging a little bit between your balance sheet and income statement. And I bet if you just close your eyes now and not even putting a number on it, I bet you could get a feel for how confident you are in your sales, how confident you are in your capacity, how confident you are in your outreach and your stewardship. Like, these numbers, it just feels like everybody else knows a different version of it. It should be on a spreadsheet. I should be able to see and look and understand this. And there might be parts in there that you don't feel comfortable about. But if you know what parts you aren't comfortable about, your go-to solution is no longer going to be, I gotta go make more sales.
Right.
The solution might be adjusting your capacity. It might be an adjustment in your expenses. It might be something else. But abdicating your authority to somebody else that promises to make more sales for you without knowing what your situation is, I've been there. I was there.
I'm going to tell you what you're describing now, we run into a lot in the window treatment industry. So we have the other company, Exciting Windows, where we teach and mentor window treatment professionals every single week on how to be profitable, Vin and myself and our partner, Steve. And we see that a lot over there, where it's like, it's a lot of male companies. EW is probably at least 50-50. We have a lot of both, but window treatment owners by far are more men than women. And window treatment owners, not workrooms are coming from craft and from skill set, but retailers are usually coming from a sales mentality. And every problem is fixed by another sale. And that's how we get. And I've said, like, I came up in window treatments. My role was sales. Vinny was completely operations and finance, and he did not sell in the beginning, first 8 or 10 years. Not never, like if it was his friend, his contact, but he didn't get up every day and like, I go sell window treatments. He was like, I get up every day and I manage, because we had 3 businesses within a year. I manage these 3 locations and I sold. And I know that feeling. As another sale will fix it. Another sale will fix it. Just go make another sale. Oh, there's only 10K in the bank. Oh, sell something. There'll be 15K. Oh, there's only 20K. Sell something else. There'll be 40K. But that completely, as you said, abdicates what's happening in operations, what's happening in stewardship. It's like, what do I need to do? Do I need to buy a truck? Because that's stewardship, right? What does this business need? It needs a truck. Well, okay, you might have 20,000, but do you have 40 because a truck costs 20? Crying out loud, now trucks cost 70. I don't know what the decade I'm playing in.
It's an old truck you got there.
I got the front end wheels. They used to cost 20. But you know what I'm saying? And it's like, and I just see that mentality a lot in window treatment, whereas designers, I don't see that's the breakdown. Designers aren't like, where can I go make a sale today? Let me just go make more sales. They want more sales. They want more pipeline, but they don't wake up thinking that. But where they make the mistake by and by, this is stereotype, is to your point, is taking in big checks and not understanding what's theirs and what is not theirs, and knowing if what's mine, is it enough to do my studio over again? Is it enough to, spend $3,000 to go to High Point? Like that's what I find with designers. Whereas salespeople, window treatment people, were like, I don't know if it's enough, but I'm just gonna make another 50,000 in sales, and I got it covered, I'm sure. And Vinny and us at EW are constantly educating them. Like Vinny's statement is, your business is like an hourglass, not a silo, not straight. It's an hourglass. The money comes wide in at the top, and then all the expenses shake out in the middle. But then when it winds out at the bottom again, that's your money. I'm the owner. I'm creating wealth money, right? Yes. And a lot of times people are just focused on the money coming in the top. Just pour more, make more sales, but they don't watch where it goes. And then you have people that are watching the expenses, but they're allowing their expenses to match the top. And Vinny's always like, let's crunch that middle. Let's make the top wide. Let's crunch that middle tiny so that all the extra pours at the bottom to you. You know what I'm saying?
Yeah, that's great. Luann, I was once doing a speech. I was a speaker for an association that was having a meeting, and I had a gentleman sit in front, and he had been in business for 50 years. And I was telling him about, this. He's
going to set you
and
straight.
He interrupted me, and he pounded his fist on the table, and he says, I'll never stop selling.
Yay you, pal. Yay you. Good. That is good. No one's telling you to. No one's telling you to.
Let me rephrase.
It's so true. It's like sell, but then manage the rest of it.
Manage the rest of it.
Right.
Manage the rest of it.
We just sell, right?
Right, yeah. Right. We need to understand the cash. So with that comes like knowing your expenses, right? Let's do that quarterly review of the detail.
The cost to be open number, right? What does it cost to run your business? Whether you have a sale or you don't have a sale, what are you writing checks for, right?
I can't believe I was paying for that subscription twice because one was on that credit card and that one was over there.
We do a tech review every year. It's like, oh my God, we're still paying for this. I thought we canceled it. But we don't get further than a year. It's like, okay, Mary Holly, it's time to do the tech review. Run it all out. Figure out what's going on. You know, one year we figured out, it was, oh my God, 5-6 years ago, we had to upgrade to like the Zoom enterprise level for a Lou University run. But it was like hundreds of dollars more. This is years ago. And now everybody uses Zoom, so it's not as costly as it used to be, right? But we needed it for 6 weeks. And we found out, like when I was like, oh, go turn the Zoom enterprise level on for the next launch. And we're like, oh, we never turned it off. I'm like, yeah. Just take that money, just rip it up, just stamp on it, throw it down the block. Because I didn't want it. I didn't work my butt off for that. But that's what you got to do. You got to that's your stewardship, right? Where you're like protecting your time, your money, your assets, all of the things.
Yeah. So your numbers intuitively, there shouldn't be any surprises.
Right.
The only time that you should be surprised on your income statement is because something got screwed up and somebody did something wrong on the
allocated it wrong,
right?
Or
it's
whatever,
in the wrong spot. Something is odd.
Yeah.
I've never come across somebody who has looked at their income statement and going, that's completely wrong.
Yeah.
And it be not something that wasn't not wrong. I have too many negatives in my sentence right now. I can't. How many negatives do I have? But yeah, like my designers, my people, they think they don't know.
Yeah.
They know.
But they do.
And once we can put this into terms where they feel like now they can actually make decisions based on it.
Mm-hmm.
Oh, I see. Yes, I have the inflow of inquiries. I have the sales. I'm doing great on closing my sales. I had kind of a dip back there in August, but I fixed that. I know
Yeah.
my capacity, and I know it was a little too high, and I cut that down a little bit, and I know how to increase it as these new sales come in. And I feel like I know exactly where my money is going. That's where they're finally like that breath of air of like,
Yes.
okay, I'm not done.
I can
I
breathe.
got
I can
this.
do it. Right. And you're
I
not
can do
dumb.
this.
It's just not been taught to you before. And you can learn hard things and you can do hard things. It's all, it's all doable and all knowable. I said it at the beginning. You need to, in my opinion, work with someone who's compassionate. Like just like who understands. I've said this 1,000 times. Every once in a while, Vinny will be like, I just don't understand. You're so smart. How can you not know this? And I'm like, I don't understand. You're so smart. How come you can't do the New York Times crossword puzzle? Like, stop. I can do that. You can do this. We're just have different brains.
Amen. Amen. Jeez.
Because he like you and when he works with our EW people, I say to him, you're nice to them. So you definitely do need somebody who will have patience with you, that will talk you through it, will let you ask the same question 4 different ways because you still don't get it, right?
Right.
Now, Megan, what I don't understand at this point is your company. Are you done for you? Like, are you a bookkeeping / consulting service? Are you do teaching and coaching and you send people on their way to go and, go forth and understand their numbers? I really don't understand the services that you provide.
I always start with the money mentorship, and that is to make sure that you and I are on the same page as to what you understand about your business.
Okay.
I work intimately to get to know you and your business because they're all different. They're all different.
Right.
If I were to say, oh, just calculate it like this and be generic, this is too intimate. It's too
who's
personal
square
and too
footage,
important.
who's this, who's that.
Yep.
Right.
Yep. So I always start with the money mentorship, and that lasts anywhere between 1 to 3 months, just depending on how much handholding you need. And that might be enough for you to take this to your bookkeeper and say, hey, these are the reports I want to see on a quarterly basis. This is what I want to see. Okay. Yep. And it might be that you want to talk about the money stuff with somebody who understands. Right. And now we have 3 months under our belt. We understand. And then we work together on that CFO level. And yeah, there's some people are like, will you be my bookkeeper? Because there's a lot that are doing their bookkeeper out there right now.
Right.
And we can handle those services as well. But I need you and I to be on the same page linguistically, philosophically, I don't know, picturesquely.
Yeah.
Yeah.
Well, you have to know that when you're talking that they're getting what you're saying, and it might take one person 3 conversation, another person 1, another person 5. Yeah. But it has to be that the shorthand gets developed. When you say a certain thing, it means something to each other.
Exactly. And I don't want to be the one telling you what to do. I will be your sounding board.
Right.
I love being your sounding board, but I don't want you to come to me and ask, can I hire somebody? I want you to come to say, hey, I'm considering making this hire. Can you help me think through this? Right. And now you have flexed that muscle and you've exercised it. So next time you're ready to hire again, you're like, okay, right. I'm ready to hire. Look over my shoulder as I do this. I think I got this right. And then by the 3rd time, you're off to the races.
You know remember how to evaluate it. You've learned the process and the key markers for evaluating it from a financial standpoint if you've got the runway to hire somebody.
Absolutely.
Yeah.
Yes.
Yeah.
Yes.
One of the things that I find, so wait a minute, let me wrap that up. So somebody can work with you 1 to 3 months on mentorship, then they can, fly the nest, go back to their bookkeeper, feeling confident. Because that's another thing too, is a lot of times, I had a chairman of the board, I don't know if it was last year or the year before, but it was like, it took me 2 or 3 times, and the bookkeeper conversation didn't come up that often, but it was like the 2nd or 3rd time over a few months that there was just an aside line on about, and you know what? And when I ask her, she tells me I don't need to know it. And I finally actually heard it. And I was like, wait, stop, let breaks. And I'm like, we're not even talking about this now, but I think like you've said that, like, no bookkeeper gets to say to you, you don't need to know that. like, no, like that's a hard no, right? It's like, yeah, I get to know all of it. And you might feel it's tedious because I've asked you. I just said to Diana today, my marketing coordinator, Nicole Heimer, Gloria Brand, does all of our work, all of our big creative work on the websites and all of that. And I have a new landing page that she's making for me. And of course, I give her all the copy in just a Word doc. And now it comes back on the landing page. And I literally said to Diana, who is my person I check all things like that, the way it looks against. And I'm like, I hate the font on this entire landing page. It makes my brain hurt. And I know at this point, it's probably my font, but I also know that I tend to ignore this font on my own website, probably. And I'm like, but just check me. Is it my font? And she's like, it is your font, Lou. It is. And I'm like, I don't know how that got in there. You know what I'm saying? So, because we have certain like 3 fonts or whatever that are used. But when I see it all in front of me, it makes me crazy. And I'm like, all right. Okay, I'm going to leave that one go, right? But the thing about it is that the same thing happens with the bookkeeper. Like she literally is like, yep, every time you see that font, you ask me it's your font. And every time I tell you it is. So she's not like, what do you think, Lou? You think it's your font? You think Nicole just put on some random font? She doesn't give me attitude about it.
Yeah.
And that's what I was finding sometimes with the designers I work with and their bookkeepers. Like, you don't need to know it. It's like, no, you don't get to tell me what I need to know. If I want to ask you 15 times and I need to ask you the same 3 questions every time we meet, then that's exactly what I'm going to do. And you're going to sit there patiently and do it. Because you know what? Come on, right?
Oh, Luann, I've got a story for you. So one of my very first clients, when I went out on my own, they came to me because there were 3 partners. One was like a 60% owner and the other 2 were silent partners, did a little work here and there, whatever. But one of them came to me and they're like, I keep asking the bookkeeper for this information. And he's like, don't worry about it. Don't worry about it. Well, it turns out not that the bookkeeper was colluding, but the 60% partner had stolen over $400,000 from the business, and the bookkeeper knew it. But he was like, "Well, since you're 60% owner, it's yours anyway. You can do whatever you want."
Oh my!
Like, it is important that you know these things, and it is important that you trust your instincts. Like anytime you're being gaslit with your instincts against your instincts, like it just eats away at your confidence.
Yeah. Oh my God.
It's not like a non-issue.
There are so many rampant stories of now that, like you said, it's not the bookkeeper being the one instigating the embezzlement, but it's in collusion with it and putting themselves to sleep at night saying you're a 60% partner. I'm sorry, unless you're 100%. Like, and unless you're only stealing 60% of the money, like, get the heck out of here.
Oh, they're playing all their personal credit cards and their, their car loans and all of that stuff.
Oh my God. No, I know.
Yeah.
See,
educate
yourself. I mean, that for sure. If you feel like something's wiggy, but even like I was just talking about, like, I just want to understand the thing. And I know I ask you every month and I'm sorry, I still don't get it yet. Whatever.
Well, that sounds like a problem with them not communicating it in a way that you understand and being adaptable to your learning style.
Right. But that is the other thing, because bookkeepers are different animals, right? They're not really verbose and communicative, and they're not really like all like, hey, let's have a powwow.
Right,
they're
they
sort
want
of
that
like,
gold star.
Sit here and do my thing, and you're gonna, right?
They want it to be perfect gold star next.
That's the truth. That's the truth. It is very, when we look at the predictive index, bookkeepers are very much like, accuracy is number 1, and no answer is better than an answer that's wrong. Right? It's like, I got to get all my facts and then I'll answer you. I'm like, just make a guess. No, it's my mother. I love my mother. Of course I love my mother. I love my mother. But I ask her a question and she's just like, I'm looking for my papers. I'm like, okay, you don't have to do it now while I'm on the phone. Like, you have all day. Go get it. Like, I know she needs to go gather her information, cross her T's and dot her I's, and then come back and tell me. Yeah. And I'm like, I'm just giving you a list of things I want. I don't need it now,
Yeah. I think bookkeepers, their motto is kind of like, I'd rather be dead than wrong. Mine is, I'd rather be dead than boring. Um,
Exactly, exactly. So, all right. So before I let you go, so if somebody does the 3-month mentorship, is there something beyond that? That if there's deeper engagement,
yes.
like what
Yes.
happens?
Yes. And at that point, usually people are like, can you just be my CFO? I'm like, yes, I'll be your CFO. We're just going to
Okay,
have to
so actual
dive in
true
deep.
fractional CFO.
Yes. Yep. Absolutely. And I actually don't let them make that decision until we're done with our mentorship
Yeah,
because they
because you
don't
got to
know.
know if, yeah,
Yeah.
no, you
They
got to
don't.
know if you're a fit.
Right. And this might be way easier than they thought it was.
Right, right.
Yeah.
And so, under the CFO umbrella as a fractional, what are some of the deliverables? If somebody's thinking, oh, what would it be like to have a fractional CFO? What are some of the things that you do?
So we review your financial statements, yawn, but but we also look forward. I maintain your forecast, your cash forecast, and on that we also track your goals, long term, short term goals. Because that's all about what we're doing with your money and all
Okay.
of the levers that we're pulling along the way. Like if we start and you tell me that you've been paying yourself $10,000 a month, and by the end of the year you want to be paying yourself $20,000 a month, that's something that we're looking towards, and we're tracking how that's happening, what resources you're using, what resources you're going to need in order to make that happen, in future forecasting. Like,
Okay.
am I going to be okay? Ultimately, that is the question.
Okay.
If I pull this lever, what is the worst that could happen? Am I still going to be okay?
Okay. Here's what I heard in my head, and I ended up writing about it in, I think, my first book. I'm not sure if it was the first or second, but what I just heard in my head was it's like if I go to a doctor is going to say, hey, your cholesterol should be here, your heart rate should be here, your blood levels should be here, blah, blah, blah. To me, that's the accountant. This is what
Mhm.
I need. These are the facts that I need at the end of the year. I'm just going to report them. Maybe, your heart rate should be 50 and it's 90. I'm like, what am I going to tell you, sweetie? It's the wrong heart rate, but there it is on the paper, right? Whereas, like, if I'm working with, say, maybe a personal trainer or a personal trainer with a nutritionist, then they're going to say, okay, your heart rate's at 90, but it should be 60. And your cholesterol's at this, but it should be at this. And your, you know, body fat percentage is this, but it should be this. So let's make the plan. And let's keep talking to you all year long about how we get to that plan. I'm not just like going to show up again in 12 more months and analyze if you got there or not. So a accountant just observes and records, whereas a CFO is working side by side, helping you guide, make decisions, make pivots, make new, hires,
Yeah.
right?
Yeah. I
It's
love that analogy.
recalculating all the time. It's recalculating all the time,
Exactly.
right?
Maybe it's time to bring in a coach. Maybe it's time
Yeah,
to
yeah,
bring
yeah,
in a
yeah, yeah.
personal financial advisor. It's time to bring in a better tax accountant.
Right. It's like, you can say to the doctor, well, I have a Twix every day. And he could say it's not good, but he'll just ask you again at the end of the year, did you still have a Twix every day? Right. Whereas your nutritionist is going to be like, sweetie, with the Twix. Okay, stop it.
My sister told me today, she's like, you're their mom. You're kind of like their mom. Am I
Right?
their mom?
Right. Like that's the thing. It's like you're helping along and guiding, not just observing and reporting.
Right. I want you to get so good at this. I want you to be so good at this. I want you to actually enjoy the seat of the CEO rather than just the design. Because, I mean,
Yeah.
you got in it for the design and it probably turned out to be only about 20% of your job and you still really, really love it.
Yeah.
But there are ways to really love the other parts of your business if we can just tweak them into the parts of your
Yeah.
personality that's going to enjoy
Yeah.
that method.
I can tell you over the years, I've had enough conversations, both on and off air, with designers that have done this. They've just drawn the line in the sand and said, that's it. Whether they're 2 weeks in business, 2 years, or 20 years. And they're like, I no longer am going to just wing it with understanding my numbers. And not one, every single one to a one. It's like evangelism. the after. It's not like, well, I mean, you really talked about it so much. I finally did it. And yeah, I'm glad I did it. No, everyone is like, oh my God, I love Finance Fridays now. I love my conversation with my bookkeeper. I love my conversation with my accountant. I feel so on top of it. I really understand what I'm doing. It's like literally evangelism because it really is just so mentally freeing because without it, it's like the doctor telling you to do these things, but all year long, you're just like, does this work? Does more sit-ups work? Does orange juice work? Does no Twix? You're just putzing. You're not really being guided and you don't know what the heck you're doing, right?
Yeah. Yeah. It's kind of throwing spaghetti and you can't really tell if it works because it's kind of a long tail. And is
Yes,
that the right numbers? And they're doing this Excel sheet right?
right, because the results are so far out that
Mm-hmm.
it's hard to know. I love it. I love it. Okay. Is there anything that we left out of this conversation, Megan, that we need to like make sure gets hammered home?
I just really want to hammer home that your intuition is so, so good. It is so
Love
good.
that.
And sometimes the best thing you can do for your intuition to learn to trust it is to put the numbers next to it side by side and be like, yep, I was right.
I love that. I love that part. That's so good because I think people don't realize that this part of your business is also will benefit from your intuition. Your finances will too. Absolutely.
Mm-hmm.
I
Mm-hmm.
don't think there's any part of us that doesn't benefit from listening to our inside voice. It's like if it's banging you on the head, there's a message you got to get, girl.
The times I've ignored it and regretted it.
I
Oh,
know, right? It's like, oh, that was dumb.
back to making those, making those mistakes the hard way.
Exactly. All right. So they reach you by going to
MeganDahle.com.
okay. It's MEGANDAHLE.
That is correct.
Yeah, because you got two names that you can spell 16 different ways from Sunday. You know
That's
that,
true.
right?
That's right. Hopefully I'm Googleable by now.
We'll also put it in the show notes, of course. But Megan, this was great. Thank you so much for being with me today. Appreciate it.
Oh, my pleasure, Luann. This was a blast.
Okay, Megan talked about two important ideas that run through everything she does. The first is this distinction between historical information and future information. Your financial statements, your income statement, your balance sheet, those are historical information. This tells you what has happened in your business. Great information. You need to know this. They're essential. They tell you the facts. They tell you the totals. They tell you where the money came from and where it went. They're important, but they're kind of incomplete, right? Here's what they don't do. They don't tell you whether the way you're operating right now is sustainable. They don't tell you why the business might feel harder or heavier, even though the numbers look okay. And they don't tell you what and how the decisions you're making today might be quietly setting you up for 6 months from now. That's why you can have clean books and still feel the freaking butterflies in your stomach. Not talking from experience or anything, my friends. I'm like, listen, I sit in your same seat, right? The statements explain the past, but they don't help you lead the future. Because what we really need is help understanding what's happening now and what our business is quietly moving toward in the background while you're busy working on projects doing all the things. And that's where the second idea comes in. The 4 functions that Megan talked about and how they're always operating inside your business. She explained it. The first function is how money enters your business. This is your revenue. This is your cash flow. This is the work that you say yes to. All right. This is usually the easiest one to sense, even without a spreadsheet. You know if inquiries are feeling steady or they're feeling sparse. You know if projects are aligned or they're draining your energy, right? If money is coming in, but it feels stressful or unpredictable, this function may need attention even though you're thinking sales are fine, right? So you know that feeling, the pipeline, what is it doing, right? And here's one of the most common reasons that this happens. Oh my goodness, if I had a nickel for every time Vin and I saw a business owner operate on a work and then market cycle. right? Because when you're busy, you're doing the work, your head is down, you're delivering projects, you're not thinking about marketing because your calendar is full day to day, truly full. But it's full with current ongoing projects, and that's the sneaky part. Now projects start to wrap up, and there it is, that pit in your stomach. Uh-oh, when's the next project coming in? So what do? You jump back into action. You start networking again. You do more on Instagram. You write a blog post. You reach out to builders, realtors, architects, and past clients. The problem is marketing becomes something you do when you're nervous instead of something you do because you're running a business. Now, Vin and I, our partner in Exciting Windows, Steve Wishnow, is a 50-year veteran of a major marketing career, multiple billions of dollars, okay? And Steve Wishnow says, always be marketing. Feeding the pipeline is not a panic activity, my friend. It's an every week, every month, all year long activity. When your marketing only happens in bursts, revenue will always feel unpredictable, no matter how talented you are. When you consistently feed the pipeline, you gain the ability to manage start dates, to smooth out your cash flow, and to choose your projects, the ones you want, instead of chasing any project that comes up. And that's when your business starts to feel calmer. Not because you're working harder, but because you're working ahead, right? You want that feeling. I know you do. Now, the second function is how money moves through the business. Megan approaches this from a clarity and pattern perspective, and I want to ground that for you in how it shows up in your business day to day. These are your operational expenses. The money that moves through your business is your operational expenses. These are the things that allow your business to function consistently and professionally. And this is where you can get tripped up because sometimes you confuse keeping expenses low with running the business well, right? So, for example, if you find yourself duct taping systems together in your head, missing details, dropping balls, and having project information fall through the cracks, that's not a discipline problem. That is an infrastructure problem. And I want you to think about it this way. If those mistakes and missed details are costing you thousands of dollars over the course of a year, but you hesitate to invest maybe a couple of $100s a month in a project management system like MyDoma Studio, I got to tell you, my friend, that's a backward way of looking at your expenses. You're trying to save $700 and maybe you're spending thousands of dollars a year with the mistakes, right? So you might have a $5,000 mistake 3 or 4 times a year, but you didn't want to spend $700,000 or $100,000 to get into a management program, a project management program. All right. The installer didn't get updated email about the grout collar. The client thought they approved the PO. You thought they approved it too, but they didn't. And now the tile is back ordered for 6 months. That's saving pennies and bleeding dollars. So when you review an expense, the question isn't, should I spend money on this? The real question is, what does it cost me not to spend money here? Okay. Sometimes the answer is, yeah, don't do it. But a lot of times the answer is no, I'm saving pennies and bleeding dollars. And the same thing applies to support. If you're missing deadlines, responding late to clients, or losing opportunities because you're trying to do everything yourself, that's not being scrappy. That's limiting your business and the opportunities for your business. Hiring a part-time admin or outsourcing bookkeeping isn't indulgence. It's about enabling you to operate on time, professionally, and consistently. And that doesn't just make your life easier. It reinforces your reputation for reliability. Okay? Megan's point here is not to spend blindly, and it's also not to cut ruthlessly, right? It's like doing it with intention to actually understand what each expense, what each line item is doing or not doing for the business. Are your expenses supporting accuracy, consistency, and growth? Or are you staying artificially lean while paying for it in stress, errors, and lost opportunity? That's the visibility that she's talking about in this second section. All right. Now, The third function, according to Megan, is how decisions are being made in the present. This is where your leadership lives, and it's often not the way people think. Megan wasn't saying here that you need to be more confident, more decisive, or somehow tougher when it comes to money. What she was pointing to is the relationship you have with the information in front of you. When numbers feel confusing, abstract, or disconnected from what's actually happening in your business, then they really start to feel loaded and judgmental. It's like a test you're about to fail. And that's when we avoid them, right? We don't want to go look at them. We second guess ourselves and we make reactive decisions just to get out of the discomfort. And that's a spiral. And Megan's insight here is the way to get out of the spiral is not willpower. It's full understanding of your finances. When you can first see how money is coming into your business, and then second, see what it's doing once it gets there, the emotional charge drops. It goes away. The numbers stop feeling scary and they start to feel usable, knowable, right? Now, here's the important part. The third function isn't actually a separate system or a new decision-making technique. It's actually the result of the first two functions. When you understand your revenue patterns and you understand your operational expenses, decisions stop feeling scary. Because not so much because everything is suddenly completely certain. I mean, it's still business after all. But because you can understand the implications of your choices, the if this then that of your money decisions becomes more clear. And the calm comes from understanding and the comfort in knowing what you know. When you get how money comes in and how it goes through the business, the beauty is that the third function comes naturally. You stop avoiding decisions because you finally know what you're deciding, right? And that's what Megan means when she talks about clean information turns into confidence. And then that leads us to that fourth function, which is the one that a lot of us don't see clearly. This function is not about how decisions feel in the moment. It's about what those decisions are quietly creating over time. Function 4 is about direction. Every choice you make today stacks on top of the last one. Every client you say yes to, every price you set, every system you delay or decide to implement. Individually, these choices can seem small or manageable, but collectively they create momentum, positive or negative. This is why a business can look successful on paper, but can be like not really doing good year to year. You can end the year and think, I've got all this revenue, but where's my share of the pie, right? So when Megan talks about visuals, I think this is what she means. Being able to see patterns forming, to recognize whether the business is becoming easier to operate or more complicated to sustain. And this function asks a different question than the first three. Not, can I make this decision? But if I keep making decisions like this, where does my business end up? That's the future that Megan's helping you see. It's not a forecast. It's not a prediction, but it is a trajectory. And the key takeaway, once you look at the framework this way, is that you don't need to fix everything at the same time. But you do want to know where the breakdown is. The first two functions help you see what's actually happening, how money is coming in and what it's doing when it's there. When you see those patterns clearly, the third function changes naturally. Decisions become calmer and more grounded, right? And the fourth function helps you zoom out and ask the bigger question. Is this business heading where I want it to go? That awareness alone can remove so much stress. And if listening today helped you feel less embarrassed, less behind, or more curious about what your business and its numbers are actually telling you, then this conversation did exactly what it was meant to do. Because it isn't about becoming a numbers person. Like, let's face it, if you're not one, you're not going to be one. But you can understand your numbers well enough to lead your business competently. I promise you, you can, right? And if you're listening and thinking, I feel this same uncertainty in other areas, not just my finances, whether it's your systems, your marketing, or how to run the business day to day, this is exactly why we have created the Lou Yu Prereqs for Success. The Lou Yu Prereqs for Success is a live Zoom session with me to help you see your business as a whole. Sales, marketing, finance, operations, leadership. Not to teach you, not to sell you, but to help you make a confident, informed decision about your next step. So the session is live February 17th, 2026, and we will have major bonuses for live attendees, okay? The link is in the show notes. You can also go to luannigara.com/events, all right? And, we're just going to talk about these 5 areas of business. Through the conversation, hopefully you will understand some areas where you're a rock star. Yay, you. Some areas where you have some gaps. My chairman of the board clients, I say to them all the time, I'm looking for the things that you do really well so we can leverage them. And I'm looking for the things you're not so good at so we can mitigate them. Okay? So that's what this is about. And if at the end of it, some of the Lou Yu classes fit that bill for you to mitigate some of your gaps, yay you. All right? So I want to thank Megan for coming on. And also, I want to remind you that she is here to help you. If what you heard today resonated with you and you're realizing that what you need isn't just reports, but you need help in understanding what your numbers are actually telling you, this is exactly the work that Megan does. She works with creative business owners as a fractional CFO, not to tell you what you should do, but to help you see clearly what's happening in your business, understand the patterns underneath it, and help you make decisions from a grounded place instead of fear or guesswork. This is especially powerful if you still feel uncertain about your money or what it means or how to use it. You can learn more about Megan and her work at her website, megandahle.com, which is MEGANDAHLE.com. The link will be in the show notes. So, Megan, thank you. And thank you for listening. I so appreciate that you show up. And you know what? Take a hot minute to thank yourself for doing the work of understanding how to run your business. Decide to be excellent. Thank you for joining me today. This podcast is a production of Luann Nigara, Inc. If you want to know more about me, my books, or Luann University, go to luannigara.com. And if you are interested in having WindowWorks help you with your next window treatment or awning project in the New York, New Jersey metro area, go to windowworksnj.com to learn more. Have an excellent day.